Welcome to Focus On, ATIDI, 25 years of impact, innovation, and risk solutions for Africa's growth. I'm Sandrine Mutoniwase. For 25 years, ATIDI has fueled trade and investment across Africa, shaping the continent's economic transformation. We sat down with CEO Manuel Moses to reflect on the journey and future vision.
We started way back in year 2001, where COMESA members and COMESA itself decided to create an institution that was going to address the issue of perception of risk versus the reality of risk. Over the years, of course, we have been on a journey to create this to become a Pan-African institution. COMESA realized that the need for ATIDI-like institutions was not just for the COMESA countries, but also for the rest of the continent. And they elevated this initiative to the AU. So around 2005 or so, AU endorsed our model and said that all African countries should join. So yes, 25 years later, starting with those 7 that joined, that created us, we are now sitting on 24 African member countries that have joined. That is in 2025, with an ambition to get to about 32, 33 by 2027. So our overall goal is to get every African country to join ATIDI, because what we provide as insurance to investors is relevant not just for the COMESA countries, but for all African countries. If this idea of perception of risk and reality of risk was not a real issue, we would not have existed. So I can confirm that since we were created to this date, we have done transactions either on the political risk insurance, which we call PRI, or credit insurance, which we call CRI, transactions worth cumulatively since we created of $88 billion. This shows you the level of that gap between the perception of risk and the reality of risk. So indeed, the market has responded by working with us as their insurer of preference over the years. About 15 years ago, to obtain an investment grade rating by S&P, and also followed a few years later by another rating by Moody's. Both of them are investment grade, in other words, A grade. That rating alone is what attracts investors to say when they get ATIDI coverage, when they get ATIDI insurance, it is investment grade.
How do you envision ATIDI's growth in terms of scale, scope, and also portfolio expansion across Africa?
When you look at our 5-year strategy, we have set ourselves, our strategic trend was from 2023 to 2027. In that strategy, we've said to ourselves, we would like to grow on what we call gross exposures to about $10.5 billion annually. And we are well on our way to that kind of a target, because last year alone, we did about 10 billion of exposures. So by 2027, we would like to do annually about $10.5 billion, so that we are meaningful a player into the African continent. That is not a small achievement, because we are not as big as the big multilaterals out there, but just compared to our capital, we are doing an average leverage of about 10 times our capital. So really, that's really punching way above our size. But of course, this is still nothing compared to the size of the African continent. There's still huge infrastructure gaps. If you look at the requirements on infrastructure alone, Africa needs close to, depending on whose estimates you're using, about 170 billion on infrastructure, roads, water. So doing 10 billion is still scratching the surface. But however, our ambition is to start that journey, crowding in other insurers, other players, so that we can do way beyond what we can do ourselves. So our hope is that in the next 5 years, we could also double our capital and do even more in the continent, so that we can be a meaningful player on investments. Also on trade finance, we would like to continue to innovate. We have realized that there's a similar problem between banks and small and medium enterprises, as we call them, SMEs. When SMEs, they are the biggest generator of employment. Yes, they might employ 3 or 4 people, but there are so many of them. And if we can tackle one of their key challenges, which is access to finance, we will be doing the whole continent a good service. But when you speak to banks, they do not like that risk a lot. So again, we've said there could be some solution there, and we've created a program which we call POSA that basically sits between SMEs and banks by providing our cover to the banks so that they can provide credit to SMEs and therefore tackle the job challenges that we face in our continent. We've also been innovating on the energy space. As you know, Africa is well endowed with plenty of sunshine, plenty of wind, geothermal, depending on which country you're coming from, hydro, etc., etc. So we said let's also push on the renewable energy space and provide solutions that help us to scale up our investments in the green economy. What we discovered was that most of these projects are being funded, but when it comes to risk of non-payment by the utilities, there was nothing. So we innovated again there and said, listen, we could actually provide our guarantee to the banks that lend to these green projects against non-payment by utilities. And that has also taken off as a product. We are seeing lots of countries signing up on that program, which we call the RLSF, that helps to promote green energies. We have also seen on the trade finance side that there's a lot of, you can say, delays at borders because goods are being transited from one country to another, especially 3 or 4 countries. There is the requirement for customs bond for trucks to move across the continent. So we joined our brothers from ZEPRI and COMESA and Afrexim Bank to say, how can we help by getting one transit bond that can cross multiple countries. We call that program the RCTG, and we are providing our capacity to that so that at least truckers can spend a little time at borders and therefore just post one bond in one country and they need to be accepted across the multiple countries. So facilitating trade in the continent. We will continue to be thinking of how else we can help in tackling this intra-African trade, because that's exactly why we were created by our governments.
Financing on the continent is typically driven by a bucket of investors. And if I was to segregate them, I would say we have multilaterals providing concessional financing. We have bilaterals, which are government to government. We have bond investors who are investing on the continent, and we have commercial lenders. ATIDI's clients on the debt side, in the debt markets, are typically the commercial lenders. And for the commercial lenders, we have international banks that are looking to do more on the continent, as well as regional banks and African DFIs and multilaterals. And lastly, we have commercial banks on the continent. For all of these clients, the lenders that are working to provide financing on the continent, ATIDI brings real value. For international banks, the main challenge they are facing on the continent is that they are typically regulated under the Basel framework, and under those regulatory frameworks, they will have to allocate capital for every dollar they invest on the continent that is linked to the rating of the counterparty. Most African counterparties will be rated in the B zone, meaning that either they cannot actually do the business, or if they do, they can only do small quantums because of these rating constraints, or that they can only provide financing for short tenors. So for both sovereign and corporate transactions on the continent, the first immediate impact that ATIDI brings to the table is we are an institution, and with that A-rated paper, an international lender can provide longer-term financing, larger ticket financing with a commensurate pricing benefit because they are able to allocate the A rating to a transaction that is insured by ATIDI. So that's one of the most direct impacts that we've brought to the continent. It reflects in our portfolio. The second one is we work with multilaterals and DFIs that are based on this continent to allow them to use their capital more efficiently. So to lend more by actually having a portion of their portfolios or a portion of their transaction insured by ATIDI and transferring that counterparty risk from a borrower, whether it's a sovereign or a private sector borrower, to ATIDI. And that is another role that ATIDI plays. And lastly, for commercial banks, we support them across the entire spectrum of financing that they provide, whether it is trade finance to corporates, or it is SME financing, or it is syndicated loans. And we hope that also allows them to diversify their portfolio, both with corporates, but also with state-owned enterprises and with the sovereign itself. Lastly, we support investors and traders doing business on the continent, whether it's taking country risk and helping to mitigate those risks, or it's to take counterparty risks. So, for example, we work with suppliers who are supplying deferred payment terms. They're collecting on for supply of goods or services upfront, and for those, our insurance also allows them to do more business on the continent. This is very important because Africa is looking to do more business with itself. So within the context of the Continental Free Trade Area, I think there will be real value in this space that we will deliver. And even in existing frameworks like the custom bonds and the commercial trade zone, we've also been able to provide support to enable for efficient inter-regional or within regional blocks trade of goods and services and transportation across different borders through the custom bond system. So we support the entire spectrum of debt and equity for the multiple players who are looking to do business on the continent, and even for those who are already very active, we allow them to do more on the continent.
Now, what we do as ATIDI, we have different products that we put in play able to help us mitigate those risks. For example, let me talk about the climate side of risk. Today, we have a product called the RSF, Regional Liquidity Supply Liquidity Facility, that we have put in place to help us able to generate renewable energy that can help to help government in terms of energy to supply to the economy. It's not political risk. We're more like advisory to government. Let them know that the actions that they take in terms of political disturbance, political inactions, can have a big effect in the market. Okay? Mm-hmm. And those are very important. Importantly, when we talk about the debt situation in Africa, we're working with the government to say, you know what product we have is not for you to increase the debt situation you have, but find a way to be able to look at priority projects. And those priority projects, what ATIDI focus on and say, these priority projects are very useful because they can help with reduction in inflation. They can help in supporting government in meeting its developmental needs, and also help government in trying to restructure the economy to help them do better. So that's what will come in ATIDI with a various product to help to ameliorate the situation in terms of all those risks. Yes, there's risk in Africa, as you see, it's in every part of the world, but the rate of return for Africa is more than any country you can think of.
From its 25-year legacy to its future vision, ATIDI is driving trade, investment, and economic stability through innovation, underwriting, and risk solutions. Thank you for watching Focus On ATIDI 25 Years of Impact, Innovation, and Risk Solutions.